As the discretionary spend gains momentum, TCS has reiterated the current fiscal will be better than the last one, and if demand picks up, it may raise its hiring target. In an exclusive chat with ET Now's Ritu Singh, Executive VP and Global HR Head Ajoyendra Mukherjee said high utilization will be a key metric to maintain margins.
TCS has been pretty focused and has been looking at delivering developing the capability that we need in order to succeed in this market. It's a difficult one from an IT services point of view, where technology becomes obsolete every 3 to 4 years. You have to continuously upgrade your skills. And today, if you see with $13.4 billion, 300,000 plus employees, very diverse set. So how are we developing, skilling, reskilling and managing the scale? Building that capability is something that we have done. So from strategy point of view, a secret sauce as you call it, I think what we have been looking at is we have been totally customer centric. That is one that we have done, is we have also reorganized ourselves so that we are focused on certain verticals and what our customers need, building our capability to meet those requirements. Second is we have developed competency and we have created offerings, what we call as full services, which is starting from consulting, IT services, doing the business processes, having engineering services capability for our manufacturing and utility customers. So investing at the right time so that we are creating these kind of offerings for us. Customer base has been a critical aspect for our success. Then from the point of view of, if you look at the way we have expanded ourselves in various markets, so new geographies, new growth markets, and the next one will be our focus towards non-linear growth. So where we have created from a research and point of view, we are probably the first organization which created a large research base in Pune in 1982. So that's the time when we have created that organization, which is driving innovative research within the organization, creating capability and building products. So that is one. Then from the point of view of investment, there are multiple things that we have done. The latest one is being in the digital field, where we have been talking about the digital 5 forces and how we are preparing ourselves so that we are ready to provide these services. Then the global network delivery model, which is having the delivery capability and the execution capability and driving execution excellence within the organization, giving experience of certainty. So these are the things that we have been doing.
You know, there are lots of things, if I could break that up. Firstly, to start with, a lot of companies that have reported numbers this quarter and the past few quarters have been giving mixed signals as far as the demand environment is concerned. What, in your view, in TCS's point of view, do you see on ground things really changing for the better, or are clients still investing in smaller projects and not really putting a lot of money in the bigger projects?
See, if you look at from an investment point of view, there are two things that happen. One is running the business, which is in terms of providing the maintenance and enhancements and regular IT services for our customers. The second is discretionary spend, which is the new projects, the new implementation that happens, which could be in terms of enterprise solutions, which is in terms of digital technology and things like that. So what we have been looking at and what we have been seeing is that yes, the digital technology is gaining ground. So there are discretionary spend is increasing at this point in time, but these, as we have been talking about, that these engagements are still small ticket items. But all of them, if you add it up, then definitely it's a larger pie, and that is what we have been focusing on as far as the future growth is concerned, building that capability, and that's a bet that we have placed.
You know, you've given a target of 55,000 for this year, and which you hiked last year. Given that Chandra's spoken about how this year is going to be a much better year, while at the same time you're talking about your focus on non-linear revenue generation.
So you're adding adjectives. So we have said that it will be better than the last year. That Chandra has mentioned, and focuses on non-linear initiatives. And yes, we have said we will be hiring at a gross level 55,000, and from a trainee point of view, what we had given offers last year is about 25,000. They are joining. They've started joining from Q1 itself. And as far as the lateral hiring and hiring all across the globe, we are pretty confident of hitting 55,000, as we have said, right, as far as this year is concerned. Yeah.
But what I wanted to ask is, can we expect a further hike in hiring, given that you're speaking of a better year ahead than the projections that you've already given?
No, we do a business plan. Based on that business plan, we decide what is the kind of workforce that we need, what is the kind of capability that we need to develop. And based on that plan, we have set 55,000. It includes non-linear growth as well. But as like last year, what we did, as the year progressed, as we increased the we saw a better demand, and as a result we increased the hiring targets, and we came out in different quarters where we said what is our total hiring is going to be. Similarly, if we see this year, we would definitely announce, but at this point in time I would maintain 55,000 as the number, and we are on track as far as 55 is concerned.
Your utilization is exceptionally high, 85%, an all-time high for you. Do you think you can sustain that going forward, given that it is very key and important factor in maintaining the company's guided margin of 26 to 28%, that band? So what levers will you be using to sustain it there?
See, there are multiple levers from a margin perspective. Utilization definitely is a primary lever. And utilization of 85%, what we have said is after a while, whether it is the percentage that should be important or whether it is, because when the size becomes large, then 55% of 300,000 people is a pretty large number. And by utilization, what we mean is 85% are on customer engagements. The rest are on the various other initiatives that we are running within the organization, the innovation, the product development, the research and development kind of activity that happens. People like me in the management, they are also part of that 15%, and also the bench that we need, including, so this 85% does not include the trainees. If you include the trainees, then that number drops to about 80%. 79.8 is what we did last year, and that will change as the trainee joining increases over different quarters.